Good afternoon. Good afternoon. It's Monday, the 10th of March. My name is Tilan Vikramasinghe, Head of Research at Maybank Securities here in Singapore. And thank you for joining for another edition of Monday Market Picks. The tariff war is official, and that's driving treasury yields as well as regional stocks lower. How much more tit for tat tariffs can there be between the trading partners? It's hard to say, but I think one thing to be sure of is expect more surprises. And I think one big surprise for me last week was the generous stimulus attempts by China during their National People's Congress. We have our China economist Erica Tay joining us to bring us the latest of how we should think about China's thinking. And then coming back home, we are revisiting one of our Opportunity Plus stocks, LHN. The stock has been quite weak lately, but Eric thinks now is the time to buy. And also we are looking at C Limited, which has had very strong fourth quarter results. And is this the peak or can there be more? We have Hussaini joining us to discuss this. And then we have Jarek, who smells special dividends as early as May. We'll talk to him about what he's thinking. And then we also have some technical ideas from our chart guy as well. So let's start with C and Hussaini to kick things off. Hussaini, welcome to the show. Now, C reported some very strong fourth quarter numbers last week. Let's start with you giving us some key takeaways from the results.
Sure. Thanks, Dylan, and thanks for having me. Yes, it was a blowout delivery from C. 4Q results came almost ahead of expectations. And on top of that, company gave a very strong 2025 guidance. So first on fourth quarter, e-commerce GMV grew by 24% year on year and almost 6% ahead of street. The e-commerce revenue growth was even stronger than GMV growth, given the take rate increases. Gaming revenues were up 19% year on year, both helped by tapping new users and better monetization of existing users. But the award goes to financial services business, which grew 55% year on year and came 9 to 14% ahead of expectations. This business, financial services business, is driven by under-penetration and piggybacking on e-commerce business. As such, no areas of softness or concerns. Now, moving on to Outlook. Outlook is as well quite strong, with company guiding the e-commerce GMV to grow at 20% year on year. Now, means 2024 was very strong, and on top of that, they are expecting 20% growth. Street was expecting 17%, so there is an upside over there. Gaming business is guided to grow at double-digit levels. Now, double-digit is a very wide range. And as such, companies see some areas of potential surprise on the back of new game launches. And finally, financial services business, the loan book over there on the financial services side is expected to grow at significantly higher clip than the GMV growth on the e-commerce business. So as such, net, the company is firing on all cylinders going into 2025.
Got it. So quite a lot of things going on. I mean, the stock is up 148% in the last 12 months. So even with all this good news, do you think you can squeeze out more upside?
Yes, we see more upside, and as such, C remains our top pick with a $174 USD target price. So as discussed, that outlook is strong, and that places C on the higher side of global peers on growth. Okay, now structural drivers are in place, such as low e-commerce penetration and financial services penetration. Logistics remains C's or Shopee's key competitive moat, which in our view is hard for its competitor to replicate. And going forward, I see a fair bit of opportunity with AI, which helps to which helps Shopee to penetrate e-commerce further and also to help generate cost efficiencies. Now, yes, the stock has re-rated massively, but even if we see its valuations, it's either below or in line with its global peers, whereas the growth is on the higher side. So that puts C better place on a growth adjusted valuations.
Got it, got it. And what is one factor that will make you even more bullish, and also one factor that will make you bearish?
I say two factors which makes me more bullish. First is leveraging AI, which can help in better product discovery, better visual effects while shopping online, and this combined should help to better or get a bigger pie from the offline side. And the second uh, bullish factor in my view is the launch of new game called Garena Free City. That game is in soft launch right now, but the initial feedbacks are really strong. Its rating is 4.3 on up to down, which is considered really good. Now, one factor which could make me more bearish, uh, and that is what if one of the Chinese competitors becomes aggressive. So if we see all of their competitors in e-commerce space are Chinese, whether Lazada, TikTok Shop or Temu, and means one of the bearish signal could be that what if one of them becomes very aggressive. I am of the view that Shopee will fight back and have all the tools to emerge as a winner. But as the fight escalates, in the event if the fight escalates, it will impact their earnings and their profitability. So that would be a bearish case. Means it's a bearish, means it's not in my best case, but if you have to do scenario analysis, that would be the bearish scenario in my view.
Got it. Okay, thanks, Hussaini, for that. Now let's bring Jarek in to talk about SingPost. Now, Jarek has been increasingly confident of a special dividend coming out from SingPost by May. He's putting a timeline here. So, Jarek, you're putting out a date. So, what's giving you this confidence?
Yeah, I think if you look at, what's happened, I mean, if you look at SingPost in the circular actually to shareholders for the EGM this Thursday, they did mention that the use of proceeds, a portion of it will be for special dividends. But they cannot classify the amount because based on SGX guidelines, you are not allowed to declare a dividend without a set of full results. That means that you have P&L, balance sheet, and cash flow. So SingPost, basically they have a March year end, so their full year results will be in May. So that's where we expect the special dividends to be declared. And if you look at, the condition of the sale, basically they need two conditions. One is that the buyer has to have the approval from the Australian government. And then the second one is the EGM has to pass a shareholder vote by SingPost, right? So currently the shareholder vote is on Thursday. And if you look at what we heard actually sold their student accommodation business to GIC, and they actually applied for the approval at the same time in December, same as SingPost. So we have actually gotten the approval already. The buyer has gotten the approval. So we think that actually, SingPost should get it very imminently as well because they are selling to Australia private equity fund. So after Thursday, if the EGM provided the shareholders vote to sell the asset in the EGM, then we do think that there's a very good chance that the deal could be sealed by the end of this month. And with that, they could actually declare then the proceeds will all be in and the special dividends could be declared in the May results for the full year.
Got it. Got it. Now, just one quick follow-up question is, I mean, the stock has been fairly weak over the past 3 months or so. Why do you think investors have been cautious despite this whole asset monetization story?
I mean, if you look at the news coming up from SingPost, it's not very positive, especially in December, right? They fired their whole management team and then slowly replaced the management team. And if you look at even the core business, it's not doing well. I mean, the postal business is really not sustainable for its costs and also the number of people using it and the revenue that it's generating. So I think basically, I think investors are quite unsure of what the future of the company is, and also going forward, what would the management do, and can they actually make the postal business, or rather the e-commerce business, profitable? I mean, the e-commerce business is facing very tough competition right now, and a lot of them are are loss making as well. So I mean, it's going to be an uphill task for the management. That's why we do think that it's actually better for management to return cash to shareholders rather than use it to invest in a loss-making business further.
Got it. Got it. Okay, thanks, Jarek. So let's have a look at SingPost. I think May is not too far away, so I think this can be a very interesting buying opportunity for this stock. Now let's turn to China and let's talk to our China economist Erica, who's here. Erica, welcome to the show. Now, the Chinese National People's Congress is ongoing at the moment, and the GDP target has been set to around 5%. Inflation target has been lowered to about 2%. Now, do these numbers surprise you?
Hi, Dylan. These numbers were precisely what was long telegraphed and expected by the markets. So I think the important word in China's GDP target of around 5% is around. So that means that the leadership is looking at growth plus or minus half a percentage point to 5%. So I think 4.5 to 5.5 would be okay. CPI inflation target of 2% is about there. I think last year the target was 3%, and we all know how that turned out. So CPI inflation actually only came in at 0.2%. So I think this time around the inflation target is more realistic.
Got it. Got it. Now, one area that actually surprised me was the fiscal deficit, which has been set to a 30-year high. And there's a lot of augmented fiscal measures as well. Can you give us a breakdown of what has been announced so far and how should we read that?
Yes, so this is a huge injection of fiscal firepower. We are looking at the official fiscal deficit raised to 4% of GDP from 3% in previous years. So this is quite significant. But on top of that, China has also announced special bond issuances in terms of ultra long treasuries, as well as special local government bonds. So these go into specific long-term projects. And if you add all these announcements up, you're looking at something like 13 trillion yuan of spending this year from the government, or 9% of its GDP. So this is a 25% increase from last year. And given that last year exports were still going strong, I think this year with the trade war, this 25% increase in firepower is very much needed to keep growth going.
Got it. Got it. Now, I mean, obviously the trade war has to be on top of all the legislatures' mind. What has been discussed about the trade war, and particularly also the other area that everyone's talking about, which is AI so far in the NPC?
Right. So in terms of the trade war, I think it was well noted that external demand will be very challenging in the coming year. And because of that, the government is doubling down on growing domestic consumption. So not just putting money in the hands of people by giving them trade-in subsidies for mobile phones and laptops and electric vehicles, but also expanding the social safety net. so that families feel more confident about spending their earnings. So specifically, China has pledged to promote universal free preschool education. So this is also to help children get a head start. And then secondly, social benefits for gig workers. So there are 200 million gig workers in China. So China has just announced that they're going to give better social security benefits and better protections for them. So in terms of the trade war, China's ministers also said at a press conference after the opening day that this is not, this tranche of fiscal stimulus is not all that there is still more bullets to come. So China has a lot of scope to increase fiscal spending if the trade tensions do get worse. Now, in terms of technology, this was the centerpiece of this year's NPC. So the government announced a lot of measures to help grow small companies that have the same kind of potential and innovations as DeepSeek. So the government has announced a new 1 trillion yuan venture capital fund backed by the state to help grow Chinese tech unicorns and tech gazelles. So what are tech gazelles? We all know that tech unicorns are billion-dollar companies. So gazelles are those valued at around 200 million US dollars. So the fund hopes that with backing from the state, a lot of these strong high growth companies with a lot of potential, they will not fizzle out before they reach unicorn status for lack of investment capital. So this is to push and produce more DeepSeeks coming out of China.
Got it. So watch out for the gazelles. Now, how is all this feeding into your assumptions for 2025? Have you made any changes so far?
So we are looking at GDP growth of 4.5%. So this is squarely within the government's target of around 5%. We also are looking at inflation reaching about 0.9%, so better than 0.2 last year. And I think for the markets, animal spirits are well and truly back. So I think, as stock prices start to bottom out and increase again, this will really feed into household confidence and consumption.
Got it. That's a lot to digest. Thank you, Erica, for helping us clear all of those issues. Now, let's move over to LHN. Eric is on the line, and LHN, Eric, has come off about 12% in just the past month. What is the market worried about this opportunity plus stock?
Hi, Dylan. Yeah, so I think there's some profit taking after the stock hit our target price of 55 cents in January this year. Besides that, I think the market is also partly concerned that the rates may somewhat soften due to the increasing supply. But we understand that the group is still maintaining a healthy overall occupancy rate of over 95% for its industrial, commercial, and co-living space. And management is also expecting the demand for both short-term and long-term rentals to remain strong in 2025 due to rising expat hiring, as well as continued recovery in the international visitors' arrival. So although we do not expect the rates to go up higher a lot, but we think that the rates should still continue to hold up around the current level.
Okay, got it. Now, we just heard that Lady Gaga is going to be performing soon in Singapore as well, so that should provide some boost to tourism. Now, in their latest first quarter results, what are you seeing that's suggesting that this is a good buying opportunity?
Yeah, so as mentioned earlier, I think with the current robust rental demand, we think the LHN will continue to expand its co-living operations, and this should continue to support earnings growth going forward. We note that the group intends to launch 3 new Koryu properties, which will add over 130 keys to its existing portfolio. And in addition, 2 more Koryu projects at Middle Road and Media Street are also set to be launched over the next 1 to 2 years. Beyond Singapore, we understand that the group is also planning to replicate its expansion strategy for the co-living business into the ASEAN regions, particularly the Indonesia and Thailand, mostly via the master lease contract. In terms of valuation, we think the stock looks quite compelling at only 6 times PE and supported with decent dividend yield of 6%.
Got it. Great. Thanks, Eric, for that. We are very tight on time, so I want to quickly highlight our chart guy has 2 ideas. One is Singapore Telecom, which has a trading buy on it. The stock has touched the ascending triangle neckline multiple times, but this time it actually completed a bullish engulfing pattern with increased volume. So that's actually a very positive signal on the technical side. We also have a trading sell on AEM. Our chart guy expects its primary downtrend to continue, testing the double top pattern neckline last Friday. You might see continued weakness on this stock. So he is having a trading sell. In terms of upcoming announcements and events, we've got the unemployment numbers coming out today for Singapore. We've got the Nordex numbers coming out on the 18th. Quite a few numbers coming towards the end of the month, particularly bank lending, which will be on the 28th as well. In terms of major events, we've got a few. I think the Lion China Merchant CSI Dividends Index ETF will be launching on the 18th of March. I think quite a topical ETF to look at given all the bullish signals that are coming out from China. So do sign up for that with this QR code that's on your screen. With that, unfortunately, we are out of time. Thank you so much, as always, for joining us. Thank you for your support and have a profitable trading week.